And this week, by popular demand, because so many of you have asked about this company, we're going over Taiwan Semiconductor, more than doubling the S&P over 5 years. And let's go over what it does. Well, it makes semiconductors, and it pioneered the dedicated semiconductor foundry in 1987. So really, semiconductors are a new industry, folks. And it's the world's largest dedicated foundry. Factories mainly in Taiwan, and there's a little doubt there about Taiwan and China. So maybe that's what's holding the stock back a little bit. But anyway, its manufacturing processes include CMOS logic, mixed signal, volatile, non-volatile memory chips, and I have no clue what that means, folks. And the majority of the company's customers are fabless, non-manufacturing, while the rest are integrated circuit makers. Annual manufacturing capacity at the end of 2022, 14.0 million wafers. That's a lot of wafers, folks. And it has about 73,090 employees, so it's a pretty big company. All right, now let's look at a brief overview of the company. Blue line is the average stock in the S&P 500. The green line is Taiwan Semiconductor. So the clean surplus return on equity, well, Taiwan's doubling the average stock out there. Net income, which are the clean surplus earnings, more than doubling the average stock out there. And revenue, almost triple, 2.5 times the average stock out there. So as we look at this stock and we look at the numbers relative to the average stock, this stock is a real winner. But let's look a little closer. Now, when we look at the net income, again, clean surplus earnings, so you take away all non-recurring items from earnings, you take away future liabilities, those stock options, take all that out, what's left over, what the company actually makes. And we can see in 2023, it had a hiccup, so it was going up nicely, and this is why everybody's asking about it, because it's such a good company, or was until this little hiccup in 2023, and now it seems to be going up again. Now, the clean surplus return on equity, to get into our growth portfolio, we want to see a 20% return on equity, clean surplus return on equity, because the average stock is around 13.5%. So this certainly meets our criteria, the clean surplus return on equity over 20%. Retention rate, how much of the money that they're making are they putting back in the company in order to grow? Folks, for a real growth company, we want to see 90, 95, 100%. We don't want to see the 61% stuff, because that means they are not growing as fast as some other companies out there, which we'll mention by the end of this video. Now, net income growth, 26%, 27% average over the past 5 years, excellent. And the revenue growth, 19%, excellent. So these are very, very good numbers here. Now, let's see over 1 year. Black line is the S&P 500, and this mustard-colored line is Taiwan Semi. And you can see just in the past month or so that it has really taken, well, past 2 months, it has really taken off, because this is a 1 year chart. Each block is a month. So all of a sudden, it has taken off, and it is almost doubling. Well, it is doubling the S&P 500 for the past 1 year. So that's pretty nice. Now, let's look at 5 years. Whoa, with the market up about, and black line is the S&P, with the market up about 80%, this is up 240%. So we're looking at almost about 3 times the S&P 500. So that's a pretty nice return, folks. But now we're going to show you something. Let us look at some other semiconductor stocks. And we're going to look at Taiwan Semiconductor, and I'll point that out in a second. We're looking at Monolithic, we're looking at Broadcom, and we're looking at AMD. Now, compared to those stocks, and yeah, they're the top stocks here, where is Taiwan Semiconductor? Right in here. Again, black line's the S&P 500. So Taiwan Semi is doing really well relative to the S&P 500, but not nearly as well as AMD. Look at AMD, 600%, while Taiwan Semiconductor over 200%, for the past 5 years. And of course, here's Broadcom in here, and Monolithic Power, which is this orange line in here. But there's still one more surprise, folks. Don't go away, because now we're going to add one more stock that is in our portfolio. Now, all these stocks, with the exception of Taiwan Semi, are in our portfolio right now. Let's look at one more stock, and yeah, you guessed it, Nvidia. So this yellow line is Nvidia, and these stocks down here, let's go back. That's all of these stocks. But when you add Nvidia up almost 2,000% over the past 5 years, it dwarfs the returns of these other semiconductor stocks. With Taiwan Semi all the way down here, you can see why Taiwan Semiconductor is not in our portfolio, because we have 4 other semiconductor stocks that are in our portfolio that are just walking all over Taiwan Semiconductor. And folks, don't forget, Taiwan Semiconductor is in Taiwan, and we keep hearing about China invading Taiwan or making noises about it. So that is another reason we are staying away from Taiwan Semiconductor, even though it is a good stock. And it does have some manufacturing facilities outside of Taiwan. But still, when you've got these other stocks right around you that you can buy with the press of a button, aren't you glad that we do have a stock like Nvidia in our portfolio, which is making us look really, really good, folks? And so are these other semiconductor stocks. Now, why don't we have more semiconductor stocks? Because there are others that are better than, or are performing better than Taiwan Semi. That's because we don't want to overweight our 30 stock portfolio with too many semiconductor stocks, because all one of these companies has to do is come out with the next best microchip or semiconductor or whatever you want to call it, and then they're going to be the next Nvidia. And as of the other day, it's Nvidia that's got that chip right now, and that's why it's outperforming by so much. And it's right up here, folks, if you can see that. And I'm recording this on the day that this stock is up dramatically and taking the rest of the market with it. So, folks, we had a pretty wild week this past week, and Nvidia saved the market because we had all sorts of sell signals just starting to take place, and then Nvidia came out with, earnings 400% higher than last year. Unbelievable numbers coming out here, folks. So you go out, you have a beautiful day. This is sunrise on the beach. So, folks, if you don't want to get up that early, you don't have to. Go out, walk, be with your friends, be with your loved ones, have a good Sunday dinner. Folks, take your mind off the market because it'll be here next week. And folks, we'll be right here alongside with you when the market opens again on Monday. Have a great weekend, folks, and stay safe.